I'm Bradford with the Penny Pincher's Guide to Personal Finance. And in this video, we're going to cover how to fill out IRS Form 1040 for tax year 2023 using the following assumptions. First off, we're going to be using the tax filing status of married filing jointly. Don't worry if you're single, we also have a video for you, and check that out in the upper corner of your screen. We're going to be assuming one child. Our sources of income are going to come from three places. First is going to be the W-2 from your employer. Next is going to be a 1099 INT from the bank. And then last is going to be a 1099B income from capital gains. Next up, we are going to be using the standard deduction for simplicity, and then we're not going to have any additional credits or tax deductions outside of the ones that come from the other assumptions we've already talked about. Now, before we jump into the walkthrough itself, one additional resource I can highly recommend is the 1040 GI or General Instructions. This is a document put out by the IRS that is meant to accompany the standard 1040. The general instructions is going to walk you through line by line, as well as a lot of specific niche situations which can help you in your specific tax instance. Now, if this video is not enough to be able to get you all the way through your taxes, I'd highly recommend checking out that document, which I'll have in the description as well as the pinned comment down below. Now let's jump into it. Now, the first thing I want to talk about here is going to be the W-2 that I generated, so that way you know where some of these numbers are actually coming from, as well as a quick touch point on what are the important parts of a W-2 that you need to pay attention to. The first part up here is going to be lines 1 and then 2. This is going to be your wages and basically the total amount of money that your employer paid you for the past year. And then line 2 is how much money did your employer already take out of your paycheck and pay to the IRS on your behalf. Those are going to be the two most important boxes that you need to pay attention to. Now, all of the other ones do matter, but when it comes to the 1040 itself, those are going to be the ones that you want to actually pay attention to, because that is what you're going to be using to pull forward into the 1040 itself. Now let's go over to that document, and starting out with the top half of the 1040, it's just your personal information. So starting out, what is your name, your spouse's name, your social security numbers, where do you live, presidential election campaign. You can check $3 for just yourself or $6 for both of you. Your call whether or not you do that. And then we're going to have filing status. This is the most important part because this is going to have huge implications for the rest of your actual tax filing and potential tax refund. This situation, the assumption is going to be married filing jointly. Now, you might ask, hey, what situation would it be where I do want to actually do married filing separately? For that one, I'm not really going to answer the question other than I am going to say that it is such a niche situation where it is better to do separately than jointly, that if you are in that situation where you think it might be better off, I'd recommend going and dealing with a tax professional and having a CPA help you file your taxes. The next section is going to be digital assets. Think, did you trade any sort of cryptocurrency or NFTs? That's going to be here. We're going to be checking no. Standard deduction. This is not the same standard deduction that I mentioned before. This specifically deals with, can somebody else claim you as a dependent on their taxes? Not applicable for this situation, so we're just going to leave it blank. And then the last part deals with filling out the information about your dependents, so that way you can actually get that child tax credit. You're going to need to know their name, what is their social security number, their relationship to you, and then for this situation, because this Joe Smith is going to be the son, we're just going to check child tax credit here in box 4. The other one, credit for other dependents, that's going to be like, are you taking care of an elderly parent, or you're taking care of a developmentally handicapped child that is older than the age that is eligible for the child tax credit. Now, moving on from this section, let's actually get into line 1 and start filling out the 1040 line by line. So this one, we're going to have income. Basically, this whole first page starts out with your personal information, and then it deals with what is your sources of income, and then we'll figure out how much taxes you owe once we get to the back of the 1040 itself. So line 1A, this is going to be the total amount on your W-2, and basically you're just going to copy and paste it from the W-2 itself. So for this one, John made $52,130.63 from the last year. Important note on including cents or not, that is actually your choice, but you need to choose to either leave it blank, where you basically round up or down to the nearest dollar, or you include the exact cent on every single box. Pick one or the other, do not intermingle the two. So next up, we're going to go through B, household employee wages, not applicable for most people. Tip income, so if you do wait staff business, make sure that's in there. Medicare waiver payments, not applicable for most people. Taxable dependent care benefits, that's going to be if you're below a certain income threshold, you can actually get tax credits that are going to help you pay for childcare. Looking at employer provided adoption benefits, not applicable in this scenario. Wages from Form 8919, not applicable in this scenario. And then other income. And the last one underneath I, that's going to be non-taxable combat pay. So if you are in the military, you deployed or in TDY to a combat tax exclusion zone, that's where that information is going to go. Now, basically, because we left all these blank because the amount was zero, again, another point, you can either leave it blank if the number is zero or put a zero in all of them. But again, don't mix the two together, pick one or the other. Now, since all these were blank, line Z is just adding up basically everything that's above it. So we're just going to copy 1A into 1Z. Now, next section deals with what are some other sorts of income other than just from a W-2. So basically everything on this side, tax exempt interest is going to be zero, but taxable interest, we're going to say he made $23.50 from his checking and savings account from the previous year. Didn't make anything from dividends, none of the other taxable amounts here. So we're going to look at qualified dividends. Again, the amount's going to be zero. IRA distributions, pensions, annuities, Social Security benefits, not going to be applicable to you unless you are already retired. C, are you going to use a lump sum election method? Since none of these things were filled out, not a factor here. Now, line 7, this is going to be capital gain or loss. Basically, you're always going to need a Schedule D, but you're probably not going to need an 8949 unless you have capital gains or losses that are not from a 1099B, which is going to be what the majority of people are using. So he made just over $3,100 from selling and trading mutual funds from the past year. Line 8, Schedule 1, that deals with additional income and adjustments to income. Basically, it's a variety of less common sources of income that aren't applicable to most people, but the IRS has to have some way for you to be able to document it. So it's going to be 0 for that. 9, basically adding everything up that is above this line. So total income for John for the past year is just over $55,000. 10, that's going to be adjustments to income from Schedule 1, line 26. Again, nothing on Schedule 1 for John, so that's going to be blank. 11, you're going to subtract 10 from 9. Since we didn't have anything in 10, line 9 can just be copy-pasted into 11. Now 12, this is going to be the standard deduction or the itemized deduction. So for this one, you don't even have to look at the 1040 GI to see what it is. You just go to the left side, say, hey, for married filing jointly, it's going to be $27,700 for tax year 2023. So we're going to just put that in right there in line 12. 13, that's going to be qualified business income from an 8995 or 8995A. Basically, that's only for business owners, not really applicable. Some information on the bottom of the screen that you can see if you are running some sort of business. And then 14, since 13 is already empty, we're just going to add lines 12 and 13. So that's just going to be the standard deduction, copy and paste it into 14. And then 15 is going to be subtracting 14 from the total income that we have, which is going to be on line 11, meaning the total taxable income that John and his wife made for the past year is going to be just over $27,000. Now that we have the front page of the 1040 filled out, we need to figure out how much does he actually owe on that $27,000-ish in taxes. And to use that, we're going to have to actually jump over into the IRS tax tables. And where do you get those? It's going to be in the 1040 general instructions. So here we have the tax tables is actually laid out in what I think is a pretty easy way to read. Basically, it just breaks down. It says, hey, you're looking to see how much money did you make? Hey, did you make above $1,000? You're going to be using this section. Above $2,000, you're going to use this section. Basically, you go and you figure out how much money did you make. If it's at least, come down here, but it has to be less than, not inclusive of, and then you're just going to go over to what your actual filing status is. So for this situation, you made above $27,000. How much above? It's between $27,550 and $27,600 non-inclusive, which means with the married filing jointly status, he owes $2,869 in taxes. So we're going to copy that number and we're going to come place it directly in line 16. Now, 16 does have some other things on here, like the 8814, the 4972, and 3 is going to be for future use for the IRS. The good thing is that those two sections are not going to be applicable for most people, because 8814 and both of those, one of them deals with unearned income for minors, which is going to be if you have an UTMA, which is a tax advantage account for your children. John does not have that for Joe in this situation. And the other one is lump sum payments. Think if you are getting some sort of retirement account or you won the lottery and you decided to take it in one lump sum instead of getting it paid out, that's going to be in this situation here. Unfortunately for John, he did not win the Mega Millions, so he's not going to be picking that option either. So next up is going to be 17, and that's going to be amount from Schedule 2, line 3. That's going to be additional taxes, kind of a similar thing from Schedule 1, not applicable to most people, but if they do apply to you, make sure you're getting it filled out. Not applicable to John. And then we're gonna have 18. So since we didn't have anything up here in 17, we're just gonna take 16, place it at 18. 19 is being the child tax credit or the credit from other dependents in 8812. Good thing for John, he does have one kid that is eligible, and that's gonna be $2,000 per child. So it's gonna be $2,000 tax credit that's gonna go right here. And then we're gonna be looking at line 20. That's gonna be Schedule 3, additional credits and deductions. Similar idea of Schedules 1 and 2, less common, but they still apply. Now, especially with these, I'd highly recommend at least looking at them, even if you're not gonna qualify, even if the chance is low. Heck, maybe one of these credits or deductions does actually apply to you, and then you can either lower your taxable income or actually end up getting a larger refund at the end. So just check it out. But in this situation, it is not applicable to John. So we're going to leave line 20 blank, and then we're going to add lines 19 and 20. So here we're just going to copy that child tax credit and put it into 21, so $2,000. 22, we're going to subtract 21 from 18. So this one, 21, is going to be 2,000. We're going to subtract that from the total taxes owed of $2,869, giving us $869 is the amount owed by John and his wife. So in there, 22, looking at 23, other taxes, not applicable here. So we're just going to take 22 and copy it into 24. At that point, we're going to be moving on to section 25. This is going to be federal income tax withheld from your W-2. So that's why the W-2 is important. Copy and paste that here, just over $2,700. Forms from 1099 and other forms, really not that common. So we're just going to be looking at 25A and copying it down here into 25D. 26. Estimated tax payments and the amount applied for your 2022 return. So the estimated tax payments are really only going to be a factor if you run a business and you're paying quarterly taxes. John's not applicable in this situation because he's employed by somebody else and doesn't have any sort of side hustle. But if you are doing a side hustle, make sure you're doing and paying your quarterly tax estimates, and that amount is going to go here in 26. So the big thing there is the IRS is not going to provide you that documentation for you if you're paying those. You need to make sure you're saving them and putting them wherever your filing documents are. Then moving here into 27, the earned income tax credit. That's going to be basically a low income threshold that gives you an additional credit to be able to help offset your taxes. John makes too much money, so it's not going to be a factor here. 28, additional child tax credit. Basically, it is another tax credit on top of the basic child tax credit. John does not apply. We got to have 29, the American Opportunity Credit. Basically, this is going to help give you some money back for getting your undergraduate degree when you go to get your bachelor's. 30, nothing's going to be in there. 31, that's going to be amount from Schedule 3, line 15, not applicable here. 32, basically you're going to be adding all of these things up together. The amount was 0 for all of them, so it's still 0 for 32. And then 33 is going to be adding lines 25D, 26, and 32. These are our total payments. So the total payments that we made came from the W-2 itself and the employer, and that's going to be the total amount paid is going to be just over $2,700. Now that we have all of that information filled out, we can figure out, hey, do I need to pay more money to the IRS because I underpaid or I overpaid and I'm going to be getting a nice tax refund? So starting off on line 34, we're going to be looking, hey, if line 33 is more than 24, you're going to subtract 24 from 33. This is the amount you overpaid. John certainly overpaid because he owed a whole lot less than he actually paid. So he's going to be getting a nice refund of $1,867. 35A, how much money do you actually want refunded to you? I'd highly recommend having all of it paid back to you unless you do run a business and you do have those quarterly tax payments, which you might want to apply this tax refund to those quarterly tax payments. But if you don't run a business, just get all of it back. Otherwise, you're giving money to the IRS to be able to have tax-free for the next tax year. So we're just going to take 34, copying to 35A. Here we have B, C, and D. This is the type of information that you need to fill out so that way you're getting that tax refund sent electronically and you're not having to wait for the snail mail to be able to get that tax refund maybe in 6 months, maybe in a year, maybe longer. IRS is not great in actually integrating with the other federal agencies to get you that money back. So just do it electronically, save yourself a lot of hassle and time. Looking here, 36, amount you want applied to your estimated tax. That's what I was talking about if you run a business and if you do those quarterly tax payments, not applicable in this situation. 37, subtract line 33 from 34. This is the amount that you owe. So we kind of shifted here. So 34 through 36, that's if you are owed money, and 37 and 38 is if you owe money to the IRS. And a quick note here, even though it's not in this situation, if you do owe money to the IRS, make sure you're getting that money paid on time. So that way you're not paying any additional sorts of fees or fines being levied against you. Now, if you pay online, you can just pay through the IRS website itself, or if you want to write a check and send it off, you can just do that. Look in the 1040 general instructions, and that is going to tell you where you need to send that money. And now that we know whether or not we are getting a refund or we owe money to the IRS, we can come down here and basically skim through the rest of this. Third-party designee. Are you having somebody else on your behalf? Say that you are now a dependent, you're having a child or someone else who's caring for you, filling out this. That would be in this section. Signing here, make sure you and your spouse sign this out. Put the date. What is your occupation? Spouse's occupation. If you filed taxes before, you're going to have basically an identification number from the IRS. Put that here. And the last part is going to be paid preparer use only. Are you paying a CPA or using some sort of tax preparation software to actually file your taxes? That's going to be going in this final section. Now, congratulations. Assuming you've got all of your other schedules filled out, you have your 1040 done. Now, to go back, look at the beginning, go through each thing line by line, make sure all the information is correct, make sure you didn't have any sort of rounding errors, make sure everything is good. Once you're up that point, you can either go and file an e-file online using the IRS's website with the free fillable forms and basically just transcribe everything from this onto that website, or you can do it through the mail. And then again, looking at the 1040 general instructions, that is going to tell you where you need to mail it. Now, that was a pretty simple tax situation that we just walked through. So if you do have a more complicated tax situation, say you got 1065s with a partnership or an LLC, or you are sole proprietorship and you need a Schedule C, make sure you're actually going and checking out our full Tax 101 playlist, because we're going to help with all those more complicated tax situations and hopefully get you from A to Z of getting your taxes filed. Thanks for watching, and from your first penny to your first million, we're here to help.